Good afternoon, everyone. Gabe Velazquez here with you, back again. This is the Market Pulse session for Tuesday, February 7th. Welcome back, everybody. Let's get right into it. Since I was with you, gosh, it's been a week now, right? Lots has happened. Let's actually just zoom in on today. We had the Fed speaker come out. But let's actually backtrack a little bit because, we had the Fed meeting last Wednesday. Things were kind of bullish, nuanced language and all that. If you guys were with me, so we had some nuanced language, and then we had the blockbuster jobs number on Friday, right? Double what everybody expected, and the market got hit a little bit. But one of the things I talked today about with my members is it's really kind of uncanny how the kind of external factors always reflect on the charts, right? So if you think about it, we had that big rally right up to that previous pivot, right around 4,200, 4,210. And then the non-farm payrolls came in and knocked it down, and essentially now we're forming another range between the breakout point around 4,100 and 4,200. If you look at your charts, everybody should be pulling up your charts of the S&P. And so now we're back in this whole kind of chop sideways action here. The next move obviously is going to be very interesting. Do we continue this rally? Do we, and it's, it's kind of tough to say. It's very confusing out there. We got all this kind of, hey, how you doing, JT? We got all this kind of, conflicting data, lots of people confused. On one hand, again, the bond market was rallying because of, recession fears. That got kind of set on its head on Friday with the huge, labor report and lowering of the unemployment rate. So at the end of the day, just to sum things up, you guys, we are in another range in the S&P, 4,100. In fact, today's volatility, you if you're watching, it was all over the place, right? Yeah, right. Yeah, exactly, JT. Yep. That was that prior pivot. Remember, we talked, again, if you just look at your charts, that prior pivot going way back to August, right? Look at your chart, 42 to 42.15, right? It's clear as day, right on your charts, correct, everybody? And so in any event, we came up there, pulled back. In fact, I was trying to short it right above. There's a little tiny gap around 42.20 that we put out for our members, and it never quite got up there. It still may be in play. We're also, in some volatility plays, close in the money, puts and calls on the SPY for tomorrow. So hopefully we get some follow through tomorrow. But that's pretty much sums it up on the S&P. Lots more. I think we're going to probably sit here in a range, and the next we're not going to break out above 42.35, 42.50, and then the next leg up, or we crack 4,100 and go all the way back down. So we're still in that situation, even though obviously still making kind of that higher trajectory, kind of channeling higher, right? But not easy, right? It's because these pullbacks are 100 points to get the pullback. You can't buy these shallow pullbacks, as I talk about quite a bit. So in any event, that's where we're at. NASDAQ still leading. Yep, we've got NASDAQ still leading, also 42,467 up to, let's call it 13K. And again, that happens to be a level from way back when, another pivot from again September on the NASDAQ. So kind of the way the pattern has been going is, we get a big base, huge, 100-point base on the S&P, 300-point base on the NASDAQ. and then the next leg up. So whether that persists, we'll have to see. So we'll check it out. But playing it right now is going to be a little bit tricky unless you're willing to sit through these 100-point pullbacks or waiting for the pullbacks to get long. That obviously is the better play, right? Right, everybody? Okay. We also, by the way, are trying to we missed getting long on the Russell today by a few ticks. We had a level here, 1936.60. You can see that clearly on your charts. We're trying to get long there. We came down and missed it by 3 ticks, and then the thing took off for about 40 points. So we'll revisit that. So a couple things I want to let me interject here in between our, I think that pretty much sums up the equities. Also, the Russell, came right up to very close to the 2020 level. So I have a new class coming up. I want to announce that right now. It's Tuesday. It's a week from tomorrow. I wanted to do it on Tuesday. I didn't realize it was Valentine's Day next Tuesday. So gonna not do that on Valentine's Day, but on Wednesday, I believe it's Wednesday the 15th, I believe, right? Gonna have and again, very important lesson. I'm gonna spend some time with. It's a free class. Gonna spend some time with whoever wants to attend on psychology, overcoming fear of losing, and all that good stuff. So that's gonna be really, really. I'm actually excited to do that class for everybody. So if you want to sign up for that, it's on the 15th. Okay. So go ahead and sign up for that. We'll put out the link and everything starting tomorrow. I'll start tweeting about it. So that's going to come up on the 15th, which is obviously first and foremost for many folks still having a challenge, especially in this environment, right? Just overcoming that, those emotions of fear and having a winning mindset. So anyways, also sign up for the newsletter. I still am offering 5 days free for anybody who wants to come in and, we've actually had some really nice futures trades finally. Now that we got the dollar, I want to actually transition that because the dollar was the big deal this week so far, right? And we remember I've been talking about 100 as the kind of final target on the DXY, the Dixie. We came up to a daily accumulation 108, to 100, 99.93. You can see it on your charts. So we did have a really nice pop in the dollar, and that was partly because of the non-farm payrolls on Friday. We came right off that. So that actually triggered. So the non-farm payrolls, we talk about the news actually accelerating price to where it's going to go anyways. And in fact, that's what it did. We had a nice pop. We did get short the peso right at the lows on the dollar. It was right on the highs in the peso. I think I've been talking about that ad nauseum, the peso and the yen. So we finally did get short. That happened on Friday. We got short peso 53.52, and we got out at 51.52. Now that was totally lucky. I have to tell you, if you look at your chart, 51.52 was exactly the low from yesterday. That was our target. So here's the thing, though. About half my members didn't get filled, including myself. Right. So a bunch of us did not get filled, but a bunch of us did get filled on that target. And we ended up getting out a little bit higher than that. But all in all, worked out pretty good. So that was the peso short. And again, if you guys have been listening to me, the only two currencies I've been talking about, right, are yen and peso. Yep. Oh, Kelly, nice. Great job. I was hoping some of you guys, a lot of us didn't get filled. I was actually with a bunch of our elite members, and we were actually watching it as it hit. And, there was like 5 or 6 of them got filled. And then the rest of us, I included, did not fill. So I'm glad you got out. Yep. Nice, Kelly. Good. I'm glad you That was a pretty good like 6, 7x trade, right? We were only risking like 150 to, and we ended up netting close to, depending if you got out at the absolute target, you got a grand on one contract. If you did two, you made 2 grand. So, but again, it's only one trade. Yeah, nice. It's only one trade, and we're only as good as our last trade, right, JT? We can't, you know what I mean? It's like, okay, so what? What have you done for me lately, right? Anyways, right. There's actually some nice levels coming up on the peso to reshort it, by the way, and that's going to be all predicated on the dollar. So let's get back to the dollar real quick. The dollar, I think, has a shot again, depending if rates come down, come up, actually, all the way back up to like 105.70. If you look at your, yep. Okay, good. Yeah, good for you. Uh, so that, and now, so this is we have been literally uh, for the last 2 months, other than the yen and the peso, broken record, right? All these currencies have just been dead in the water, right? But now with the dollar finally, and that was because if you, I mean, if you look at the Dixie, it's kind of the currencies have been mirroring the Dixie, which has been in a range for 2 months. Finally broke down and so on and so forth. So now that the dollar's starting to move, you're starting to see gold. Gold we missed also by a couple of points. We had a short in gold. And that also collapsed as a result of that big dollar rally. In fact, we had a short in gold 1977.50 for the members. We missed that, and then gold is actually sitting on an accumulation 1881 right now. So we'll see if that pans out. And then silver, we're also short on that. Kind of a longer term position in an options play on SLV. So those are all working as long as the dollar keeps rallying. Those should come out come out pretty good. We also got long copper, by the way. Just kind of going through some of the positions. We got long copper 4.0130. So just to give you a sample of what we're doing now on the future side, everybody. And again, join me for 5 days. You get some of these levels. One of the things that I've been finding lately is, people come in for a week, and then kind of that week happened to be like, I don't know, we took a losing trade, and then that's it, right? So can you really assess or really make a judgment on any kind of system in a week, right? No, absolutely not. You got to give it at least a quarter, I would say, right? 3 months to get a really kind of assessment of what it is. So it's really interesting, but it is what it is. I'm when I'm talking to people now, the first thing I ask them is, how serious are you about pursuing trading? Because it's a really hard road to go if you don't have any patience or discipline, right? And you don't have patience, meaning patience to weather out some of this, some of the challenging months or some of these challenging markets. We sat with literally doing nothing in the currencies for 2 months because there was nothing to do. That's really hard for people to do, right? And it's kind of ironic or whatever you want to call it, paradoxical that people want action but they hate to lose, and then when you give them a bunch of action and they lose, then they pull in the rain. So it's just really fascinating to me. It's always fascinating. Doing this for 30 years, so right. It's and then you wonder why 90% of people that trade lose money. That's an actual fact, by the way, right? 90%, and that's probably generous, right? Of people that trade, especially in the futures markets, lose their money. So there you have it. That's my little mini rant. I haven't ranted for a little while, so there you go. Right? Right? Anyways, okay. So yeah, so let's talk about the bond market real quick, and then we'll finish up with we have a grain report tomorrow, and then we have energies. So we're in Boyle as well. I'll get into that in a second. So bond market, we had the 10-year sell off really hard because of those non-farm payrolls, right? We were kind of in that range. I think I mentioned 114. You can see it on your charts, 116. And then we finally gave way with the non-farm payrolls. Strong non-farm payrolls pushed the market down, rates up. Remember, bonds go up when things are bad and go down. Bond prices go down when things are bad, when things are good. It's kind of counterintuitive, right? So good news. That good news on non-farm payrolls actually push yields up and bond prices down. Now we do have some levels coming in. We had a gap on the 10-year 112.07, which could be interesting. And we're also sitting on a daily accumulation in the 10-year. So that's going to be interesting to see if that holds. And all in all, I would tell you, if bonds continue to fall, i.e. rates continue to rally, that's also going to be bullish for the dollar. Rates up, dollar up. And I'll ask this as a question. What do you think that does for stocks? Let me repeat myself. I know there's a lag in the chat there, but you've got rates going up, dollar going up. What do you think stocks are going to do? Not that we know for sure, but what's the... Yep, exactly. Exactly. So the question becomes where from and whatever. We can just chop around. So why is it important that you guys track the dollar and bonds? Because of that. So now what happens if bonds recover? Then then stocks can keep going up. So that's kind of where we're at on that. Okay. All right. Let me move on to see what time I got. Okay. Let's move on to energy. We are long Boyle. We've been sitting with that. We're almost break even on that. Again, we wrote it, but again, we had a really tiny position where our stop out was if nat gas futures drop below like 175. So we're able to weather and essentially nat gas is starting to show the first kind of the first signs of life here, or if you will, the first bottoming action on nat gas. I don't know if you guys are watching the chart, and I'm going to go through that real brief here. We made a low of 233.8, right? If you pull up your nat gas chart, we came down on Monday, made a higher low, right? So that low was 236.5, right? And then the subsequent low yesterday, this morning, was 143, and now we're about to take out the highs. So we're starting to see the shine of light. Would you add to Boyle since below buy point? Kelly, I mean, if you know where our stop is, right? So I only did 50 shares just so we could weather that out, because I'm looking for this on a long-term basis. So just so you know, right? If you want, yeah, of course. I mean, just make sure you put your stop in there. You are going to get a little bit lower cost basis if you do that. I think we paid like what was it, 738. So it's sitting at 679. So yeah, you'll get a little bit a better cost basis if you want to do that. Yep. So yeah, it's starting to it's starting to show now. The first major kind of obstacle for this to really bottom out is 260, 265. If we can get through that, then I think we got a clean shot at 3. And by the way, if you haven't traded Boyle, if just nat gas goes back to 6, which is my target, this Boyle goes from 7 to about 30. If you don't know what I mean, look at KOLD when nat gas was at 8, that thing was at 10, and it traded all the way back up to 60. So check it out. That's the inverse short nat gas, double, ultra short. So this is the ultra long. So you can see there's the upside potential on this, and that's why I'm using. And then on the future side, it's kind of very tricky. Uh, so that's kind of what I'm using Boyle with. Yep. Okay. All right. And then oil had a nice pop. We're still long USO calls. We're going to run out of time on those, unfortunately, but came down right. Again, big old range. If you look at your charts, clearly you can see a turning point down around 72. That was the last turn. We came down again, had a huge rally today, kind of in no man's land between now the lows here again, that new low 72, 83, 82.50, the highs. We may stay in a range, but if we break 82.50, I'm getting, yesterday I talked to my members. I thought I was warming up to oil. We just didn't get a setup. But oil looks pretty good again. Again, came down, buying low, selling high. When you're in these big ranges, that's really how you want to trade this. So, coming down, I did make mention to my members yesterday. Now we got to start looking to buy oil, and but we missed it quite honestly. So we'll see what happens, and we still have some USO calls that hopefully come back to life in the next few days. If oil, as you know, oil can really get motoring here. Wouldn't shock me in the least if it, today it had almost a $3.50 gain. So as you know, so we'll see. But either way, any kind of pullbacks now, I think we should be looking to buy oil. And then lastly, we were in a soybean trade. We got out break even. We got a big grain report tomorrow. I think I don't know if it's going to really impact the grain markets. We haven't really had a ton of impact on the grain markets recently until we get into harvest season. So we'll see. But that was a kind of a no harm, no foul. We were up a couple of bucks. We got in at 15.11, traded up to 38. We were looking for a much bigger target. Again, smaller position. Some folks did take a profit on that, small profit. But as you know, I like to go for a bigger target. So I personally, on our tracking system, basically got out break even. Yeah. So in a nutshell, everybody, now that we basically have the Fed out of the way for now, we revert back to earnings. Incidentally, we are long. We did an earnings play on Take Two Interactive, TTWO. I don't know if you guys check that out. We had a really nice run up today. We got long yesterday when it was sitting around 105. It was all over the place, but it had a really nice run. We need about 120, 125 to be profitable in that trade. But so far, if you looked at the close on that thing, that looks pretty good so far. We have to again continue the upside on that. So that was a earnings play, and I'm looking at a couple more earnings plays this coming up here in the next. If you guys want to do some earnings play, come in and visit me for 5 days. And also, I would do technology because a lot of these other stocks really aren't moving a whole lot. We're in that. Boeing, I believe I mentioned that, and that actually didn't work out for us. So not all of them will work out, but we've had some pretty tremendous ones in the past. And it's as you know, trading is just kind of it's a law of probabilities and large sample size. So hopefully this works out for us. So far, so good. It did have a nice pop today. It was up almost 10 points at the high of 115. And it pulled back. So we'll see. As long as it gets above 115 and starts cruising up to 120, 125 TTWO, I think it's going to be good. So other than that, I think that's going to glad I could get on here. Last week, we had some other challenges not of a technical nature. But anyways, so I'm glad I'm back with you guys. Try to make it consistent. Next Friday, I'll be with you. So again, tomorrow we've got grain report, and let's see if we can break above that high 40 um, on the S&P. Either way, for us right now, we want to see either a hard break below 4,100, the way we're positioned right now, or a resumption of the rally back above, like S&P around 418, 420. That would be good. So also, again, I'm going to have a class a week from tomorrow, so sign up for that. I'll post a link, and I'll be tweeting about it probably tonight. So hopefully I'll see some of you guys in there. It's going to be an important, psychology lesson, which we all need, right? That's kind of the main thing. Can't get your mindset correct. I don't care how many charts you look at, right? So anyways, okay, everybody have a great Tuesday night. I'll see you on Friday. Okay. Take care. And again, if you need to contact me, support at transparenttrading-solutions.com. Sign up for the newsletter and all that good stuff, and give me a thumbs up and get people to check out the channel, and so all that YouTube stuff that I'm not that good at. All right, take care. All right, see you guys. Hey, Boz.